And we're live. Welcome back to Strongman Personal Finance, everybody. If you don't know who I am, I'm Christopher Bell, and I'm a Boglehead investor. And I actually found this guy on YouTube that has a pretty decent following. His name's Moki Finance, and he also invests in index funds, which is shocking because you never find that on YouTube. So I decided to have him on, and we're going to collaborate, talk about delicious index funds. Welcome.
Thanks so much, Chris, for having me on the channel. It's an honor and a pleasure. And thank you guys for joining us tonight. I think we're going to have a good discussion on index funds. And maybe if the pace picks up, we can even talk about Meet Kevin and Jeremy from Financial Education, or Tom Nash. A few of the guys I follow myself too. So we can get into that as well.
We have to talk about it. Who cares about index funds?
Yeah, I mean, here I'll tell you what. Well, Chris says buy VT. I'll tell you buy VTI, VXUS, and VTWV. We're done. Buy those three or buy VT. You're done. You got invest as much as you can. Max your tax advantage accounts. I think we'll all agree on that, and that's all we got to say about that.
No, I thought you were supposed to trade in out of stocks and YOLO into meme coins like Floki. I mean, don't you watch the Dogecoin Millionaire?
Yeah, I did. I saw that guy too. I made a comment on his channel about almost a year ago, I think, whenever this craze happened. I said, people who come into wealth overnight lose it overnight, and lo and behold, I think I don't think he's a millionaire anymore, if I'm correct.
Oh no,
because Dogecoin's at 14 or 15 cents.
Yeah, if Dogecoin's 25 cents, he's a millionaire.
Yeah, there you go. Because he had like, I don't know how many freaking he bought 180. I think he put everything, like all his life savings, got credit card lines maxed. I mean, stuff that probably me Kevin would say to do. He did that, but he did it on Dogecoin instead of speculative stocks like oh god. We'll save that for later. Let's educate the audience the first half at least.
The education is always a good thing to start with. So sure. Tell us a little bit more about you. To index funds and just educate us. I want to know more.
I mean, most of my financial background really didn't start until 2018. In 2017, I'm what you would probably call a broke loser, making $150,000 a year, spending $175,000, right? So I'm living above my means, probably the biggest amount of money I've ever made in my life, and I blew it all. And then 3 years later, I lost that job in the summer of 2017. And I came to the realization that my net worth was negative. This is the first time I ever tracked my net worth. And I'm negative $14,000 in the hole. No job. Married, newly married, freaking out. The wife's freaking out. We got student loan debt, car debt, motorcycle debt. I mean, I had all the toys, right? And I realized I had to do something different. And this guy at work, I finally got a job at a bank. And this guy told me about Dave Ramsey. And I read his book, listened to his podcast. Man, it was great stuff. It got me out of debt. But then I stopped short on his investment advice. Something didn't feel right about, using his programs and all this. So I picked up a book from John Bogle. It was called The Little Book of Common Sense Investing. It's a little red book.
Who's
John Easy Bogle? Read.
Huh? John Bogle. I've never heard of him.
And yeah, I mean, I read the book and I'm like, holy cow, this thing called index funds is essentially what Dave Ramsey's saying, except the fees are less. And I've always been a stickler for fees. I hate paying for something that either I can do myself or that isn't really worth its gold and value. So I said, I'm going to do this myself. And after I became debt free, it took me a year. Me and my wife paid off $87,000 in essentially 11 months of debt. This is all the cars, all her student loans, motorcycles, all that was paid off. And all I did is I flipped the switch. Instead of paying off $87,000 every year, now I invest $87,000 or $90,000 a year. So I've been doing that since 2019, 2020, 2021, and now 2022. The first thing we prioritize every year is maxing out our Roths and maxing out our 401ks. So we always do like 100% of the paychecks into that. Once we get that maxed out, then really the HSA is the next thing. And then after the HSA, I have a newborn now, so I focused on a 529. After that, it's been taxable accounts. So I grew my net worth essentially from that negative point now to 350, 355, depending on the market. A lot of that is over 310,000 invested in the market, and then a little bit of real estate, but I really don't count the real estate as a true asset. It's more of a used asset. So I also started this YouTube channel as sort of a side hustle, turned into something full-time now that we are not financially free by any means, but we have some FU money. I could tell my boss F off and I'm going to go do what I do. And I did that in March. I quit my full-time job to pursue YouTube and some other side ventures with my business. And yeah, I've just been doing that, doing kind of everything that I want to do and nothing that I don't want to do, and spending time with my kids, spending time with my wife, and that's that's pretty much where I'm at now.
Yeah, you're a brave man. So like, I'm still in the workforce. I mean, I have a decent amount invested as well, but every time I think about, oh, maybe I'll quit my job. It's like, oh well, I could be saving more if I keep working.
Yeah, I get that, man. I've had that. I had to break that cycle because the first time I ever sold, so since 2019, I've never sold to take any money out of my account, and literally invested every penny. And at this point, I bought a piece of real estate 2 months ago, used my emergency fund instead of my brokerage account like I planned on, because I don't like pulling money out. And finally, I got in a pinch where I needed cash for property tax, and I didn't have it. I had to sell like $8,000 of an investment, and it hurt so much. But I think the older I've gotten, and my kid too, he's helped put a lot of perspective in this. I want to spend time with him. I don't care that I'm not maxing out every freaking dollar. You're probably not going to like this, but the wife buys Honest diapers and Honest baby cream
This is
rashes,
over. We're done.
which
You
me
have
in the
to
past,
go.
hey, with me in the past, I probably would have freaked out about that because I like to save every single penny. But I think now I've come to a realization, it's not all about maxing out every single dime and kind of enjoying life a little bit. That's how I quit my job with a full intention of going back into workforce within like 4 or 5 years, right? I'm not going to just not do anything, but I think having the luxury to do it and say, hey, I don't need all this money. I don't know if you've heard of Coast Fire, but I feel like I'm on Coast Fire because if I just stop 310,000 over the next 30 years, I'm 32, so over the next 30 or 28 years, couple of $1 million, right? So I don't have to do anything. I'm still going to max out tax advantage accounts, and that'll probably be as to the max level that I'm going to take it going forward.
Yeah, I mean that's the option that saving a lot of money gives you is you can definitely retire early and pursue other ventures. I mean, I've definitely thought about it. I mean, I'm like, should I keep working? Should I not? I mean, maybe the next couple of years, like if my YouTube takes off, sure, maybe I'll consider quitting my full time job. But right now, I'm focused on getting experience in the tax realm because I kind of want that skill set just in case YouTube doesn't work out or other side gigs don't work out. It's always kind of there as a backup. But I definitely understand what you're doing, and I'm definitely considering it.
Give it time. You can always make a course and sell it for thousands of bucks, and you
Yeah,
can do.
that is the path to wealth. Then I can buy trash stocks and pretend like I'm a genius, and then my portfolio goes up because I earnings. But like I said, or like we said, we'll get to that eventually.
Yeah, everybody has their own. The thing with a personal finance journey, everybody's on their own journey, and it's always going to look a little bit different. I think you have a kid too. I think you have a second one on the way. Congrats on that. But
Yeah.
stuff in life will change your perspective. I was in the emergency room 2 months ago, having emergency gallbladder surgery, and I was like, holy cow, this is kind of scary stuff. What if I don't make it? Not that, I mean, it's a pretty common surgery. Most people survive, but you get different outlooks in life when life hits you certain ways. You're like, man, maybe I don't have to squeeze out every penny or go chase every dollar in earnings. But for young people, I think it's very important. If you're starting out young, guys, this is the most important piece of this message tonight. If you're in your 20s, even your early 30s, try to get your income up as high as you can. Keep your expenses as low as you can. Invest early, invest often, invest everything. Tax advantage accounts, starting with Roth IRAs, 401k matches, max out 401ks, after tax 401ks if you have them, HSAs, all those sweet accounts. And if you do that just like in the first 5 to 10 years of your life, you could take your foot off the gas and just coast the rest of the way. You'll be fine. But if you're young, and a lot of people around me in my family and friend circle who are younger, who are buying crap stocks or cryptos. And I don't know how you feel about, I'm pretty sure you don't like crypto either, but I think crypto is like one big Ponzi scheme. Honestly, it's like a $1.3 trillion Ponzi scheme that it's going to be exposed eventually. But if you're doing that stuff and thinking that that's going to make you rich, unfortunately, guys, history has proven this time and time again. That is not the path to wealth. And as I mentioned on Dogecoin or Pro to Doge, anybody who gains wealth overnight, if you look at lottery winners, athletes, anybody who doesn't know how to manage $1,000, they're not going to know how to manage $1 million. You're going to go back to being broke. It's just the fact of life. That's how it works. It's like a big circle. And hopefully you guys pick that part of the message. If you're young enough, get your income up, live below your means as much as you can. At one point, I was living off of $30,000, me and my wife. living in Chicago. It's a huge market, huge cost of living area, right? So if you can do that, you guys are going to be fine maxing out your tax advantage accounts. It's not even so important. I guess it is important that you use index funds, but not which type. You can put VT, VTI, VX, whatever you want to do. What's important is how much you contribute, not really what you're. In the end, we're all going to earn 9.5 to 10% after inflation, 7 real returns. It's all you can ask for. Get the market return, and yeah, that's my message for
really,
tonight.
the average investor, if you look at historical performance, they probably do
Terrible.
2 or 3% compounded per year because
I think the
they
last
try to find the market, they pay taxes, they don't know what they're doing. It's so easy to see. It's the same thing's going on now. All these clowns are buying a bunch of trash stocks and stupid cryptos like you've been talking about. And they did good one year, but you can see the fortunes, the winds are starting to turn, and a lot of people are starting to get annihilated.
Oh, for sure. And I think what's that quote from Warren Buffett, when the tide goes out, you can see who's skinny dipping. I mean, 2020, one of the guys that I actually did a review on was Chris Sane. Had a family member that followed him, and they started following him last year in January of 2021. They lost like 80% of their portfolio. And they're like, hey, can you look at this guy and see? This is before I even knew about you. And like, I looked into him and I'm like, my God, this is some of the worst, advice I've ever seen. And the guy's literally picking stock price and saying it's going to go to this level. No analysis behind it. No idea. I don't think he even knows what the company is. And anybody in 2020 can do that kind of stuff. And you're going to look like a genius. And me and you, Chris, we're going to look like dumbasses making, what do we make in 2020? 16% in index funds. And I've had a lot. Yeah, I had a lot of people comment like, oh, I made 300%. I'm like, great, good for you. But what they don't realize is on the back end, all that speculative stuff, that all the hype that was driven by hype, eventually the hype fades, right? Eventually somebody realizes there's not enough fools here that are willing to pay X amount of dollars per share for a business that, like Lucid, that has my company had more revenue than Lucid last year, and Lucid's worth $30 a share. You guys want to
some
buy?
companies that I've looked at, man, like I, Chris Bell, have made more in my job than these companies.
And then you see a freaking $20 billion market cap, right? And like, come on, guys. But yeah, I mean, a lot of people in a bull market do this kind of stuff. This isn't new. Everybody says they're a stock expert, a stock guru. Chris Sane is one that stood out particularly because he was really cocky about it. I mean, he said he's the best on YouTube. He crushes stuff. When they sleep, we eat. I don't know what he was saying, but he was basically saying he returns on a bad year 40% a year, and a good year he does 70%, right? And I opened this guy's portfolio, and he showed like some holdings he had, and now it's like 100% AMC. It's down to 50 some thousand. And I'm like, my God, is this the stuff that people are listening to? And that's exactly what kind of me and Chris, if we stay on our message and we keep promoting the good stuff, eventually we're going to win out, right? Eventually people are going to see these people for the fools that they are. And they're going to hopefully start buying low cost, broadly diversified index funds and tax advantage accounts.
Yeah, I have no doubt. If we keep doing what we're doing, I know we're going to win because we're speaking the truth. I mean, it's so obvious to me. I've been investing in index funds for 10 years. And like you're saying, you start young, max your tax advantage accounts, put as much as you possibly in. That's literally all you have to do. This is not freaking hard. The hard part is, resisting getting swept up in stupid freaking fads like, crypto and other stuff that's going on right now. But if you can resist that and you start young, like you said, coast fire, you can quit your job. You don't have to worry about it. I mean, I recently quit another job that I had a government job, which, secure.
Oh, you left the government. Wow.
Yeah, I know. I didn't like it. I was bored out of my mind. I was
but dude, you probably had some great benefits, right? I'm talking about health insurance, TSP.
The benefits are great. Like you said, your TSP, healthcare, you get a pension. But at the end of the day, I was like, this is boring. And, I think if I go out and get a skill, increase my accounting skills, I could probably make way more and keep investing and still be much wealthier than, the average government employee. So I took the leap. And then, of course, I punked out and got a job within like 2 weeks after quitting. But but yeah, it was fun, not working for a couple of weeks. But that's all I could do.
Well, I mean, here's the thing, right? If once you'll see too in your YouTube space, how long you been doing YouTube?
I've been on here about a year and a half, maybe.
Okay. Yeah. So once you get closer to 10,000, or even once you cross like the 5,000 mark, there's going to be other opportunities to make money on YouTube. Obviously not. I mean, I get emails weekly on like shilling crypto and penny stocks. Don't do that stuff. Obviously,
I'm already starting to get those. NFTs.
Yeah. So don't do that stuff. Obviously, but you'll get some legitimate sometimes opportunities you can work with brands and incorporate them. And some of the money there will probably be a lot better than YouTube. And eventually once you build this thing out and once you have a loyal following and you're preaching good stuff like you are and like I am, yeah, there's no doubt that we are going to win. It's just a matter of, I don't think we'll ever have millions and millions of followers, because these people that follow these bigger channels, they're a bunch of gambling addicts and they go there for the rush and the adrenaline. They're not there to really build wealth. They're just there to get rich quick. We don't offer that kind of incentive for them to watch us for long. So I don't think we'll grow that big. But essentially, I think once the dust settles, we probably be the last one standing on YouTube, at least willing to put ourselves out there, show our portfolios, and talk about our investing philosophies.
I mean, it shows we're index investors and we're long term investors because I'm not here to grow my channel super quick. I mean, if it does, great, but I'm here for the long haul, and I know in 10 years, if I keep this up, I'm still going to be here, and a lot of these freaking clowns,
exactly,
a bunch of frauds, are going to be gone.
And think about that. Like, even if you don't want to work anymore and you could just do YouTube for 20 grand a year or 30 grand a year to pay your bills, right? And you're set. That was kind of my plan initially, setting this up, thinking I could work anywhere in the world doing this. And as long as I stay on message and show people the true path to wealth, I feel like I got nothing else to hide. I'm fully transparent too. I show my portfolio like once a month. I show everything, and there's not much to show. It's always the same. It's just the value goes up or down. Yeah, here the value goes up and down, but other than that, now I've gotten into. I want to talk to you about VT. Not that I disagree. I totally agree. I think the simpler you keep investing, right, the better. That's such a John Bogle thing in a Boglehead way. The thing with VT that I didn't personally like, every one of Bogle's books, I read all 10 of his books, but Common Sense on Mutual Funds and Bogle on Mutual Funds, he mentioned an important thing that initially when I started investing, I was just 100% US. And I built a 6-figure portfolio, and then I was like, I got to diversify, man. This is scary. Like, I'm exposed to the US. What if we go through a negative decade, like 2000 to 2009?
Look what happened
to Japan. Or Japan, right? For 70s, 80s, greatest economy in the world. 1990s, since now it's been negative or flat for 30 freaking years. So I realized the need for diversification. And then I went back to Bogle's stuff, and he was never a big fan of international for a few reasons: currency risk and accounting and governance issues, right? And he was always saying, well, the U.S., you get paid in U.S. dollars. That's the currency that you use. That's the currency you should stick with. And then U.S. companies have technically international revenue, so there was a need. But I think he wrote those books in the 90s, before this whole globalized, diversified world that we live in now. But the thing with VT, there was one thing that I didn't like, was for foreign tax credits, if you hold in a taxable, if not, or 51% or more of the funds in a exchange traded fund are not foreign, you don't qualify for the foreign tax credit. So I think for people in taxable, you could still create a VT using VTIVXUS to take advantage of that. Otherwise, you get a sort of a double taxation. Other than that, man, just buy VT or a combination of VTIVXUS or a target date fund. And target date funds are great too if they're index funds. They have everything you need essentially in one fund with a glide path towards retirement. Us younger people, we don't need bonds right now. At least I don't think we do. We can stomach 50% market declines.
We'll see in the next 10 years. But
I still like to think we can. I mean, we probably, like me, you don't check your portfolio often, so we can stomach that. And because compound growth is a funny thing in the beginning. And Chris, you probably know this better than me if you've been investing for 10 years. In the beginning, it's so small you don't even see it or recognize it, right? But if you've been investing for 10 years, you've probably seen now how quickly compound growth has expanded on itself. And your portfolio is probably starting to make even more money than you're contributing potentially if you're in a big bull run like last year, 27-28%. And if you can say you had a $200,000-$300,000 portfolio, you made a good 30-40,000 in the stock market with your portfolio. And that's all compound growth. That's not your money that you put in. But in the beginning, it's so slow. A lot of people are short-sighted. They have a hard time seeing that, and they might, even in index funds, I was one of them. I was jumping in and out of ETFs. I was trying to essentially time the market in my early days. Still had a bit of that gambler streak in me. But then after reading a lot of Bogle stuff, I decided to go into TIFs, as he called them, traditional index funds, which are mutual index funds that don't update every second on the stock market. They basically update once a day. There's no need to check them. I don't know the price. I have no idea what they're doing. I just know they're making me money in the background. But yeah, I think for most investors, VT, VTI, VXUS, some kind of combination of that, or a target date fund, and set it and forget it, and you guys are good to go.
Yeah, I mean, so I mean, you can create a portfolio besides VT. I mean, like you were mentioning the foreign tax credit. Yeah, you have a slight disadvantage if you have VT in a taxable account, which, in my opinion, I think most people don't make enough money to
That's true.
put
Yeah.
money in a taxable account. But the thing is, it stops you from trying to time the market like you were
Yeah.
talking about. Because
Yeah.
if you have VTI, VXUS, U.S. stock market and international stocks, you might be like, well, maybe US has done good. Maybe I should trim my US allocation and
Yeah.
do 40 US. Having VT just it's ultra simplicity. You don't have to time the market. You're never tempted to time the market because you can't freaking do anything with it. You just have VT and you just let it ride. And sure, you pay a little bit higher expense ratio, and
It's not a big deal. Yeah.
and eventually, if international stocks go above 50% of the world market cap, which I think they will
They
eventually,
have to. They have to. I mean, the next 10 years, I don't want to predict some, but in the next 10 years, if international doesn't outperform the US, I would be shocked. I mean, I would be super shocked. US has had a streak. I don't know if you put this out or somebody, but I was watching a statistic. Essentially, the 70s and 80s was all international because of Japan. The 90s was US. 2000s was all emerging markets. 2010s till now has been all US. But when I looked at just the price to book of a total international fund that's 70% developed, 30% emerging markets, like 1.6. I mean, we're talking about trading close to book value on these businesses. And I have a little bit of a value tilt too that I'd like to talk about, but we might get into that later. I don't know how value oriented you are, but anyways, the international is looking so attractive right now. Yeah, I have the itching to sell a lot of US right now and pick up international, just how cheap it is, right? But I have to stop myself and say, hey, I allocated 20% to international, 60% to US. I'm going to keep it like this. I don't care. I just balance on Valentine's Day. It's coming up where I rebalance once a year because I can't forget that date. But yeah, otherwise I'll be in the dog. I always say it's my first two loves, my wife and my index fund. So
oh, honey, I
that's why.
forgot your flowers. I was rebalancing my
Yeah, I was rebalancing, but yeah, international looks so attractive, and I think I would be hard pressed to say that VT doesn't outperform VTI over the next 10 years. It has to happen, but we'll see. It's interesting. It always comes in decades, right? It doesn't happen overnight. It takes decades for this stuff to happen. But if you go long enough, 50, 60 years, they're both large cap blends, international large cap blend, domestic, about 9.75, 10% is their return. They just happen uncorrelated. They don't happen at the same time. So it's a good idea to hold both to kind of smooth out the ride and get the best potential return.
Yeah, I mean, a lot of people they say go all US because they only look back 10 years. It's like
Yeah.
you need to
And
look back a lot further than
it's
that.
terrible advice. It's like driving a car out of the rearview mirror instead of the windshield. If you're looking back 10 years, that doesn't tell you the whole picture, right? You're looking at the rearview mirror, but you can't see what's ahead of you. You got to be a lot more forward thinking than that. But sadly, I was that guy 2 years ago. I was just all US thanks to JL Collins and John Bogle, but I've come around and allocated 20% to international. I really see the value in that, and I'm willing to take that extra additional risk for that potential of outperformance.
Yeah, that's the one thing I never understood with Jack Bogle. I mean, I know you can't question him because he's God, but it's like, come on, man. You
It,
advocate,
it was a
index.
different time. I think because it was a different time in the 90s, total international funds were not that cheap. I mean, in the 90s, like VT Sachs was when it was created, it was probably like 20 basis points, right? So it wasn't that cheap. And international was even more, it was 30 or 35. So I think he came from that perspective. And then also some of the historical data on international stocks is a little wishy-washy depending on where you look, who your sources are. So I think Bogle had a bias towards the US, which served him well because he created Vanguard literally at the time of the biggest start of the bull run in the US in 1975, and it served him well all the way to 2000, right? He looked like a genius. But then people woke up and saw, hey, when the US had negative returns that decade, that maybe having international is better. And I think he came around later because the guy who wrote is it Langmore? I forgot his
Terry Larimore or something like
yeah,
that.
who wrote the what's it called, the Boglehead's Guide to Investing. He recommended international, I believe, in that book, and Bogle endorsed that. So I know Bogle came around, and yeah, we can question him, but he is God. He is God of the index fund, but it's okay, we can question him. There's a lot of data I think we can analyze and say, yeah, Bogle was wrong on that.
Oh, yeah, to me it's kind of ironic because like Jack Bogle, he's all about US, and then you go look at the actual Bogle heads. Like you go to the Bogle heads forum, all they do is talk about VT. I mean,
Yeah.
there's some dissenters there, but it's basically total
Yeah,
world indexing.
exactly. I think VT, a lot of people have woken up to VT. Even a lot of the podcasters now that I listen to have woken up to it because of the simplicity. And sometimes, like you said, simplicity trumps all. Like it doesn't matter that the allocation so much is not going to matter. What's going to matter is, are you going to stay in it for the long run? Because if you're buying and selling, you're going to average 2%. If you're actually staying in it, you're going to get your 10%. And what gives you the best chance to stay in it other than probably a global world fund that has probably 14,000 stocks? You own the whole world. You're king of the world. Why try to beat that? It's like Bogo said, sometimes you just got to take good enough. You don't got to go for perfect.
That's my goal, man. I want to own I want to be the majority shareholder in every single company in the world. That's why I'm trying to buy as much VT as possible.
Yeah, that's going to take a lot of VT to do that. But yeah.
I'm working on it. Maybe I'll get there one day. And the funny thing is, like, I notice a lot of, wealthier people, they invest in hedge funds and they do all these, private equity. I think even if I got super wealthy, I would still probably be 100% VT, because it's still the best way to build wealth. I don't get why people think that because, I'm wealthy, I have to invest in a hedge fund now.
It's silly. I don't want to say that until I become a millionaire. Then God, maybe I might go into private equity. Who knows? But I understand the private equity side at least. I don't understand the hedge funds. I don't understand paying somebody 2% to essentially underperform the market and go bankrupt. That's what most hedge funds end up doing. I can understand the private equity. I think I'll talk about small cap value now. Probably is a good time to transition to it. I think with the data and the research I've done in small cap value, which is essentially a very small portion of the stock market when you look at it as a broader market cap, small cap value, which is stocks under $2 billion now that have been beaten up, small cap, not the small cap growth that these YouTubers are pushing, but on the flip side,
you don't have Tattoo Chef? Come on, man.
No, not that's not. Sadly, though, in one of my small cap value funds, AMC is the biggest holding, not by design, it's just how it fit by market index. But that's my point. Since 1927, small cap values returned 13.75% compounded annually, compared to the S&P 500's 9.75. It's by four percentage points. It's beaten out the S&P. It does it in weird chunks. And it's definitely a long-term hold. Like you have to hold this stuff for 40 years to really realize any premium. But there's a lot of academic data. If you just want to read papers by Eugene Fama, Kenneth French, cross section of returns and really understand why small caps pay a premium because of essentially the size equity premium, which large caps are more stable, so they're going to pay less premium. And then between value and growth, value pays the better premium. Growth is really hyped for 2-3 years and then it underperforms for 20. Value, it might underperform for 5 to 7 years, but essentially what you're doing is buying good businesses at low prices. Eventually value comes around and outperforms growth. So you add those two premiums, the size premium and the value premium, and you add a little bit of potential to outperform, and you can tilt. Like I recommend, I have a strategy. It's called the Moki 3, 60% total US, 20% total international, 20% small cap value. It's not for everybody. It's very risky in the sense that essentially you're 100% equities. So if you're younger, great. But if you're like 50, please don't do this. And then also, if you don't believe in small cap value, like I believe in it, like it's a hill that I'm willing to stand on and die for because how much man hours I put into this and how much I believe in it. If you're just going to sell out of it, please listen to Chris and do 100% VT and call it a night. But I do expect that small cap value 20% tilt to get me potentially an additional $1 million in 40 years from now. Will it happen? I don't know. In the past, it has.
Right. I mean, the thing, like, I actually had that briefly because I mean, I read the same stuff you did. I was like, oh, it's outperformed, and it makes sense with
right.
the whole thing. But I was looking at my portfolio and I was like, well, I'm tilting small cap value, and it's freaking US. So now I'm massively positioned even more in the US.
Yeah.
So that kind of scared me away. I mean, luckily it was in my Roth, so I sold it, didn't pay any tax. I actually had better returns that year from small cap value. But I wanted a global portfolio, and I wanted international to be market cap weighted. So if you tilt small cap value, obviously if you're just doing US, you're going to be more concentrated in the United States. And that goes back to the argument, well, what's going to happen in the US over the next 10 years? What's happened in the past? So that, I mean, it definitely makes sense. And, I think there's like small cap international value funds you could do. I mean,
Avantis and DFA have those. I mean, those guys are essentially active, but they're not active management, low turnover, 20 basis point expense ratios. Yeah, you can do this strategy using international. A lot of people have. Again, it's not for everybody, right? It's if you really want to dig into it and follow it and really understand it. If you don't, please don't do that. It's more of a bet than anything, and it might work out, it might not. But at the end of the day, for sure, we know that if you continue to dollar cost average into tax advantage accounts in a whole world, eventually, unless we have like a doomsday scenario where the whole world explodes, VT is going to be the way to do it.
Global warming, bro. But
yeah, maybe. Yeah.
Yeah, I mean, like every investor is going to be different. Some people are going to be 100% VT. You're obviously, what, 60% VTI, 20% international. I guess the other 20% is
US small. So
US.
I looked into international small. I was going to do a 10 international, 10 US, and again, the data that I could find was kind of sketchy, and I'm so analytically driven that if I can't like verify the source of the data, I don't trust it, and I just don't include it in my research. And the only one I could find that was trustworthy was going back to 1927 for US and going back to 1994 for international. I just didn't think that 20, 30 years is a long enough period to tell me anything, so I decided not to. But it wouldn't be a bad idea. I think once we get hopefully better technologies out there, and maybe that's the thing with international, right? Some of the record keeping and accounting practices, they're not to the same code as the US, and you're an accountant, you probably know better than me, but not all these countries have the same accounting practices. So maybe US stocks report quarterly, and a lot of international companies report annually. They don't even give out quarterly numbers because they are more long term in their investing. If you look at like Japan and a lot of these other developed countries, their investments are not as speculative as ours in the US. Like their investors are actually long term investors, so that's a good thing. But again, it goes back to how many of these other countries can you trust, and the numbers that they're reporting are accurate. So that's why I didn't go international small cap value, but there is a case to be made for that too.
Yeah, I mean, like I don't worry about like the records and stuff like that too much. To
Not
me,
in
it's
VT,
like,
yeah. In
yeah, I
VT, it
mean,
doesn't
to me,
matter.
it's like, hey, what part of the world is going to be growing faster in the next 20, 30, 40 years? It's not going to be the United States. I mean, we're
No.
still going to be a big country, and US stocks will probably be much higher in the future, but all the growth is basically in Asia and even Africa. I mean, it may be a while for Africa to develop, but
Some
that's where all the
emerging
population
markets,
growth is.
yeah.
Yeah.
Some emerging markets that get untapped. Oh crap! I don't know if you hear that. I think a fire alarm just went off in my building.
You go check it real quick.
Hang on 1 second.
I'll read some comments.
All right, let's get to the comments. I'll be right back.
I'll collect my tendies. Respect, support, love the humor vids of Lou. Thank you for your generous donation, and I'll go after Lou more because I think he's a scumbag. But whatever. I buy VT, meet Spin Kevin, gets VT at the truck stop. Am I turning into Meat Breath Kevin collecting tendies like this? Cheek clappers. Who is this? I wonder who this is. I wonder if I know this person. Thank you, everybody, for your kind donations. I really appreciate it. I got to click on my tendies first. Let's see if there's anything else. Did Kevin really change his hair color? And trust me, we'll talk about Kevin. I want to buy the LaFufu hedge fund. Yeah, just buy the same garbage stocks over and over again. You know what I don't get about Jeremy Lefebvre? It's like, okay, you have these massive positions in these, 5 different crappy stocks. Why not pick another stock and, put more money in that? Like, why does he keep buying the same freaking stocks over and over again? It's madness. Well, whatever. Maybe he'll be richer than I can ever imagine. I mean, according to his Instagram, he wants to be, he wants to have $4 billion by the time he's 70. Okay. Yeah, buying tattooed tank's going to get you there, I'm sure. India's the new China. Yeah, you own Indian stocks in VT. Sadly, it's not a large part. Most of international is.
Hey, sorry to interrupt, Chris. Yeah, the fire alarm's not coming off here in the building. I'm gonna have to evacuate. I'm sorry, man. I don't know what the heck's going on, but I gotta get the wife and the kid out here.
You did it on purpose. You got tired of talking to me.
No, I swear I did. No, I live in a big complex here, and I don't know if there's real fire or what's going on, but I got to get out just to make sure. I don't know if you want to hang on. If they turn this off, I'll jump right back on. If
yeah,
not,
I'll answer. I'll screw off and answer some more comments.
All right, I'll keep you posted. Once I get outside, I'll get on my phone. I'll keep you posted. Sorry about this, man.
Yeah, not a problem. He did it on purpose, didn't he? Just kidding. All right. Let's see. So many comments. Jesus.
I need more Tindies. Send me all your money. Buy my course, bro.
Can we get a... Is that why you guys watch me? It's just for my antics? You don't even care about what I'm saying. You just want me to put pee-pees on Jeremy Lefebvre's face. I may or may not have yanked out one of Lefufu's step into a bowl. I don't know if you guys saw that, but that picture I keep putting on there on the iPad, that's actually like the female version of Jeremy. Jeremy's actually pretty hot as a chick. Hope my wife didn't see that. Have you ever tried tattoo taint? I actually have. And what I'll say is, it's not horrible food. It's not like the worst food I've ever had. My problem with the food, number one, the company's unprofitable as crap, so I never buy the stock. But you get super small portions, and you pay like $5 for a little bowl. So, I mean, like the average family, to feed their kids and their spouse, they're not going to buy freaking Tattooed Chef. That's what Jeremy talks about all the time. He's like, oh, the middle class, they're being squeezed and they're going to be all vegan and they're going to look at Tattooed Chef to buy stuff. No, they're not going to buy Tattoo Trucker's taint. You know what you buy if you're like middle class? You get like pasta and chicken and pork. You don't buy freaking Tattooed taint. If you wanted to feed your whole family off Tattooed Chef, it'd probably cost you like, $30 a night, which is ridiculous. It's hipster food. Yeah, it's freaking trash. And even for a hipster, it's like a hipster's not going to want to keep paying $5 for a little Buddha bowl or whatever stupid garbage. But I've actually bought a couple things of Tattooed Tanks. I use them for props in my videos. I actually have one in my fridge. I have an idea about what I can do for a video, but I've been really busy and haven't had time to do it. I got a Tattooed Chef ad when I clicked on the video. Yeah, it's pretty funny because I talk about it so much. I guess Tattooed Chef thinks that my channel is the one to advertise on. That's the beauty of YouTube. The ads, they're targeted, but they're not that targeted. If they actually knew what I said about Tattooed Chef, they might not do that. Can we get a stuttering meat breath, Kevin?
Hey, everybody. It's be Kevin here.
That's all you guys like me for is my antics. You don't even care about me. Chris Sane pushed 125 shares of Taint. Of course he did. See, the problem with Chris Sane, besides being a total freaking moron and loser and grifter, is that he tells you to buy 125 shares of every stock. So if you wanted to buy Berkshire Hathaway, I think you would need what would you need? You probably need like $4 million to get 125 shares of Berkshire Hathaway. It doesn't make sense to buy 125 shares. Oh, it's Seth. Bro, your takedowns are brutal, boy. Thanks, man. Hopefully I don't get sued. We'll see. You guys will bail me out, right? If I get sued. 125 shares, the magic number. Yeah, as soon as I got 125 shares of VT, I just stopped investing, bro. I mean, because Chris Sane told me to. I got 125 shares of VT, and then the rest went into Tattooed Taint. Whoa, I know. Seth checking in. By the way, I love your channel, Seth. You guys are doing great. Okay. But I actually unsubscribed from your software because now I got a new car payment. Because I have 2 freaking kids now. So I got to cut some bills. Paul will totally bail you out. Is this a legal commitment? Oh, man. Sometimes I wonder if I'll get sued, but then again, it's like, whatever. I can make more YouTube videos about it. Ape Father is a loser. I love how he does not respond to you anymore. Yeah, I think they all made a collective decision to ignore me. It's whatever. I mean, Ape Father's boring. It's just kind of like, okay, you're an idiot, and you lost 75% of your life savings buying a trash dying theater company. Good job, bro. Totally cool, bro. Keep slaying. You guys, too. You guys are growing massively, and I love it. One day, it's only going to be people like us on YouTube, and all the clowns will be gone. But then again, I'll be out of things to talk about, I guess. I need the clown so I can make entertainment. 2 kids, that's a free $600 a month. Yeah, so they actually got rid of the child. Well, they haven't renewed the law for the child tax credit. So I would get the old child tax credit, which is $4,000. Was $2,000 per kid. Last year, yeah, you would have printed Tindies, as me, Kevin, would have said. with the child tax credit. But if they renew it, yeah, I'll be freaking $7,200. I'm not even going to be a taxpayer if they renew the law. That'd be freaking awesome. And I'm not complaining. I know I crap on, Democrats, but when they print tindies for me, I'll take the money. Who's dumber, Meat Breath Kevin or LaFufu? I would have to go with Jeremy. I think Kevin's intelligent. I just think he went down the wrong path with stocks. I just put out a video where he talks about
oh yeah, I don't know anything about stocks.
And then, there's a bull market and he takes advantage of it to sell courses. So he's smart. LaFufu's an idiot. I mean, that guy's just, if you're going to be a stock investor YouTube channel and you can't even do discounted cash flows, which he admitted to not knowing how to do, what are you doing? Sorry about this, guys. It's okay. Never invite you on again. Let's see. Time for a Stockmo update. All right, here's the thing with Stockmo. I can't make a video about it. He's so boring. I've actually started to do a video. I've opened up some tabs and I've tried to find good spots in his videos, and I just can't freaking do it. He's so boring and lame. I can't make it. I've done a couple videos about him, but it takes a lot of effort, and I need to be feeling real good to make a video about Stink Blow. But yeah, he's a freaking loser. He's scum of the earth. Oh,
hey guys, Stockwell here. I used to be a financial advisor. I should manage a pension fund in Pennsylvania.
Yeah, okay, bro. Waiting for the fire alarm to go back off. I'm waiting here patiently. It's fine. I have till 10 o'clock, and then I gotta go to bed. Actually, I'll stay up a little bit later if you're able to come back on. Get Seth on the Saturday live stream. Seth, you want to come on? You're more than welcome to my little channel, my little hate channel. Meat Kevin is smarter, but overestimates his abilities more than Jeremy, and that's saying something. Yeah, that's true. Meat Kevin isn't dumb. He knows how to grift. He's very clever.
Woo!
He's back.
Holy cow, that was scary. Sorry, man. I mean, I don't know what happened. No. I live in this huge building complex, 300 units, and the fire alarm goes off probably once a month.
Bro, you don't have 20,000 rental properties like Meat Kevin?
No, I don't. Only one, sadly. But oh man, I'm out of breath. I'm out of shape too. I probably should get out of shape.
Well, I'm glad you didn't die.
Yeah, I survived. I just had to get my son out, man. This is the first time the fire has gone on since we had him. He's only 4 months old, and first thing that went in my head is screw everything. I can get my kid out. So,
oh, yeah, especially with we've had our alarm go off, and my son's 7 months. It's holy crap, his ears must be freaking bleeding.
Yeah, and we have these whole. I mean, this is like that. Remember when the fire alarm goes off in school? How loud it used to be. This is like that whole system through the whole building. So
I actually failed out of 6th grade. So that's all the school I have.
No, you didn't. You're lying. What were we talking about? Let's get back on. What were
so we got 15 minutes.
Okay.
We can talk a little bit more about index funds.
Screw that. We told them everything about index funds. Let's have some fun.
Yeah. So who are we going to attack first? Meat Breath? Jeremy?
I think Meat Kevin's a good, interesting topic just because I said this before. I don't know how many people paid attention, but I used to follow Meat Kevin 2018, 2019 when he was talking about real estate, when I was really big on getting into real estate. And all of a sudden in March of 2020, this dude flips and starts talking about stocks. And I'm like, this is new. What happened to the real estate, Kevin? And then, it was just shilling every freaking pump stock you could. Looks great in 2020. And then 2021, his true colors are exposed with a lot of the stocks like Peloton that, he started turning into a trader all of a sudden. And I'm like, I thought you said buy and hold for 5 years when I watched the Peloton video. Not that I own 0 individual stocks. I watch this stuff for entertainment. I just love stocks and investing. And all of a sudden I started seeing a pattern of, oh, this guy's a trader, but he's still using the terminology of an investor. And I think his true colors came out in this recent, 2 weeks ago when he sold everything.
Yeah, he does. He is whatever suits him the best. One day he's a trader, but if his stock goes up massively like Tesla, I'm a long-term investor. He vacillates pretty significantly. That's his whole grift right there. But yeah, he should have stuck to real estate where I think he actually has.
He's a genius. He made his killing in previous to now becoming a millionaire off YouTube and his courses, but he made a killing in real estate and really grew that real estate brand of his. And I thought he was a genius. But yeah, I'm not a fan of him now. The other guy, part of that crew, what's his name? The tattoo guy, Jeremy.
Jeremy LaFufu.
Yeah, so Jeremy was a Walgreens worker, apparently, according to his, and he's been investing.
You work at Walgreens.
Yeah, I mean, I worked at Lowe's, so when I was in high school, so I
he was also a gas station manager.
He was a
apparently
gas.
that gave him the knowledge to become a genius stock investor.
And I think he was pushing GoPro back in like 2017, 2018, and then he hit on Tesla in 2019. Quick side note: I had 10 shares of Tesla in 2019. I bought at, it was pre-split, about $300 a share. So that was back when I was doing individual stocks. I sold at 700 pre-split. Once I doubled my money, I got out. I said, I'm done. I never in my wildest dreams thought this would happen. What happened with Tesla? Now it's like a massively overvalued car company that people are calling a technology company. But anyways, he got rich off Tesla call. He bought, I don't know, $10,000-$20,000 worth of Tesla back in 2017.
Yeah, he did not put a lot into Tesla.
No.
Think for a genius investor, he would have put
everything he put money into is down, except the $20,000 bet on Tesla, which Kathy Wood apparently put a bet on Tesla, and she's a genius, right?
She's looking good now, isn't she? Arc's just killing it.
Dude, I made a video on Arc in January of 21 when it was at $150 a share, and I said it's going to 50. I didn't put a time target. I just set a price target of 50. I never had gotten so much hate in my life. And now that I don't know where it's at today, but I don't care. It's probably closer to 50 than 200. People were telling me back in January of 21, it's going to 200. I said, if you think that she could return 147% in 1 year and the next year still have a positive return, I want what you're smoking, because there's no freaking way. You can get lucky once, but there's no way you get lucky.
It happens all the time. You have the star manager, and then they become victims of their own success, and then their fund implodes. It happens every freaking time.
Yeah, because guess what? Maybe she bought Tesla in 2017, 2018, 2019. She's still buying Tesla at 1,000, whatever it is now, right? Eventually, that's going to implode on her. And we've seen, I think, 9 out of 10 of her stocks have had 50% declines in the last year. 9 out of the top 10 holdings.
I've been saying it constantly. It's like the only.
So you too. You're out.
Yeah, the only thing holding up everybody, all these clowns, is Tesla. Once Tesla goes down,
it's all over.
One bad quarter, I think it's going to go down.
Yeah, what did Elon? I think the last earnings call, I still like to listen to this stuff, even though I don't invest in it. He said like 50% growth. I think wait for Tesla to actually reveal a 10 or 20% growth one quarter, and probably goes back to 400, 300, wherever its fair market value. I haven't looked at the financials, but they're not selling more cars than Ford or GM. I know that. Or Toyota or Honda or Volkswagen.
Yeah, they're not with Tesla people. They're like, oh, look at the revenue. Well, you look at other car companies; they have like 10 times the freaking revenue.
Yeah, and revenue, the like profit margin and free cash flow is what matters. Who cares about revenue? I can increase my revenue, but if I'm losing money, and does that mean anything? No, I'm still unprofitable. Yeah, I don't think he understands. This is where the value investor in me comes out, and I think there is another channel I found, Everything Money. I found them, and again, I don't do
this guy.
Seth. Oh, is he from Everything Money?
That's him. That's Seth.
Oh, heck yeah. What's up, Seth? So I think Seth used to be a growth guy, and then he met Paul and Mo, and he's changed his opinion on investing, and probably is more of a value investor. But it only makes sense, right? Why would you want to overpay for something into the future where the future is uncertain? Why not underpay for something that looks like fundamentally it has a brighter future? And really what value investing does that a lot of people don't understand is it minimizes risk management, right? You built in almost, a stock is so beaten down, you've already got that built-in risk. It's probably not going to go more than 10% from, if you've done your research on it, it's probably not going to go 10 or 20% more. I guess in the case of Baba and some of these other stocks that have been affected by China, those unforeseen things. But
Baba can go anywhere.
it can, but when you look at the numbers, it's like, holy cow, man. It's like buying Amazon at $500 a share. Would you pay $500 today for Amazon? Heck yeah, I would. And Baba's at what, 120, 130? But I mean, it just makes sense. And I do a paper trading individual stocks because I'm not confident enough to do my own. So I do a lot of paper trading in my paper trading accounts. And so far it's beaten the market. But again, I can't put my own money on it. I just like to do it for fun.
Yeah, I mean, if you want to play with stocks, like keep it, like I always say, keep it below 5% of your portfolio. I mean, my biggest position is Alibaba. I have like 10 grand.
Oh, you do? Oh, nice.
But like,
Yeah.
it's like, okay, Baba goes to zero. Like, yeah, it sucks. I
So
lost
yeah,
$10,000.
yeah.
But
I liked Baba at 150. I was gonna do 35K into it, and then I was like, I can't. I went back to my paper trading account and did it there. And now I'm down. I'm down, but I don't care. The other thing is I've seen channels like Chris Sane and Stock Mo, Larry Jones, a couple of other guys. I mean, zero knowledge, right? These guys have, if you just listen to what they're saying, they have no freaking idea. I mean, they're pumping whatever Meet Kevin and LaFufu are pumping. That's what these guys are pumping. And those channels, 500,000 subscribers. And people sometimes think that, you know, I come off as a hater of them because they have more subscribers. I'm like, intelligence in this world is not measured by how many subscribers one person has. I would like to think that intelligence is measured by, you know, how much research you do, how much books you read, how much of an understanding you have in a specific subject where you can call yourself not even an expert, but you can call yourself knowledgeable. Somebody that comes in and makes 7 videos a week, and every single video is the Dow Jones is this, the S&P is this, I think Neo is going to do this, I'm really bullish on Lucid, and it's like, why are you that? And there's no fundamental analysis behind it, whether it's qualitative or quantitative. If you want to tell me a story, and a lot of these people sell story stocks, oh, Neo made 8,000 cars, they're going to take over China.
They
It's like,
tripled their car production.
yeah.
The stocks are tripled.
Hey, their revenue might go from 1 million to 200% revenue growth, bro. Like, come on, guys. Like, guys, let's just be a little more realistic.
Well,
Let's
honestly, you have to blame the audience. Like, I don't understand how all these clowns that have lost so much money are still growing, but they are. It's because the audience, that's what they like.
Well,
I mean, it's sad, but that's the truth.
Sad to say, it's an uneducated audience, and these people will get whittled out of the stock market eventually. They came in March of 2020 with a stimulus check and a Robinhood account, and eventually they're going to blow up their Robinhood account and they're going to get out of the stock market. It's the same thing as the shoe shine boys in 1929, shining stockbrokers' shoes and giving them stock advice to the stockbrokers, right? The shoe shine boys. So eventually, those people they take out margin, they play with options, they play with fire, they get burnt out of their accounts and never to be seen again. Like I don't know if Dogecoin is going to the moon. Yeah, okay. I don't know what happened to AMC. Did the Moaz happen yet? Where's our boy? What's his name?
Look, any day now it's going to happen. I promise. Keep buying more shares.
Rumor has it, if you give Matt Kors enough super chats, it's going to happen in 2035 if he gets like another 1 million in super chats. But yeah, those guys got real quiet too on the AMC movement. I thought it was pretty funny. Trying to save a company from going bankrupt that deserves to go bankrupt. That's capitalism, free market capitalism. Unprofitable businesses should go to zero. They're trying to save it and fight hedge funds when they're playing into Wall Street and into the hedge funds' hands. Like, these people, they have computer systems, algorithms, thousands and thousands and thousands of pieces of research that they know what your next move is going to be. You're in your basement with no freaking knowledge, and you think you're going to beat the hedge fund. And it really shows you their intelligence when they're betting on
they think like they're like, oh, the hedge funds are just sitting there waiting to get screwed. It's like, no, they're probably playing both sides of the trade. They're
absolutely. That's why they're hedge funds. I mean, hedge funds hedge against the market, but they're still in the market, right? They're not like 100% shorting every single. They're still in the market, guys. So whether you like it or not, they're going to win on both ends, and they have unlimited amount of money.
Like, oh my God, we're screwed. We can't do anything.
Yeah, they have so much money.
Got us.
And that's another guy. I didn't know about him, but I saw him on your channel. This guy, who's the last guy you just did? Zero brain cells. Yeah, zero. Again, when somebody talks like that, you should automatically know this guy has no freaking idea. I mean, he's said zero things about the stock. It's just AMC popcorn, AMC this, same thing that people talk about Dogecoin or Bitcoin or Tesla or whatever. It's going to be the only thing that survives. It's going to be the greatest company in the world. The greatest. Come on, stop it. Just stop it. And I don't know, man. I think we're always going to have a job, me and you, because there's always going to be this type of stuff in the stock market. It slows down when the market's in more of a bear market, but when next bull run, there's going to be new Chris Sains, new stock mo's, and there's got to have to be us index funds to band together and fight these guys off.
Well, yeah, there's always going to be finance grifters. I mean, like the number one grift throughout human history is, working in the financial industry, in my opinion. So yeah, they're never going away. We're always going to have ammunition. which is fun. I like talking about these people and making fun of them.
Yeah, it is fun to a point, but then I always think about like there's real people behind these usernames that they're being hurt by listening to these people. That's the sad part to me. But yeah, I mean, for the longest before index funds, you were paying 2% to a fund manager to basically do what's known as closet indexing. They would buy the freaking stock market but not call it that and charge you 2%, and that was the norm before Bogle created the index fund. So yeah, and Wall Street has so much stuff to sell you, right? But none of it's really good for you. And it all comes down to keeping it simple and buying the whole world and owning it for the least amount of cost as possible so you can get 100% return on the market. And the funny thing is, if these companies like Tesla do work out, which they did, people made fun of index funds. Well, now you own Tesla.
It's like 1% of VT, I think.
Yeah. I think it's grown. It's the sixth biggest in the S&P, so it's probably grown to probably 1.5% of the S&P. But the thing is, if Tesla goes to zero and you own shares of Tesla, you're going to get wiped out. If Tesla goes to zero and the S&P is not going to feel a blimp, like it's going to eventually start selling off because of its market cap weighted. So Tesla keeps dropping, the market cap gets lower, it's less relevant to the fund. Some new blood comes in and replaces it and is more relevant. And Tesla will fall off and us index funds investors won't feel it. But if it keeps going up, then great. It's part of the S&P and we're going to reap the benefits. So
it's almost like a win-win,
we're like a hedge fund. We play both sides of the equation.
Yeah, even with AMC, it's like, oh, you make fun of AMC. It's like, well, if AMC goes to $1 trillion zillion, it's like, okay, I just got rich too. So
yeah, I mean, price target of 100,000. I forgot what the market cap. It would be like 30 times the market cap of Apple. So yeah, if that happens, yeah, it'll be the number one holding the S&P 500, and I'll celebrate with you, apes.
Honestly, I'd probably sell at that point and then wait till AMC crashed.
Yeah, that might be.
I'll probably time the market. It's like, yeah, this isn't gonna last.
So the funny part is the Russell 2000 value fund that I hold is a small cap value, and its number one holding as of last September was AMC, and I literally thought about selling it. I was like, holy cow, because this fund is as close to equally weighted as you're gonna get, like 1,500 value stocks. AMC makes up like 1.5% of the fund. The rest is like 0.03% all the stocks. And I'm like, man, this is really going to drive the fund's performance, but it hasn't. It's still not. It's too small. I mean, if it was like 10 or 15%, but I think even this is a rules-based index where eventually they'll kick it, like because its market cap is going to get above that 2 billion. I mean, and it's already above that. So I think next quarter I'll be out of AMC in my small cap value. I'll be happy. But I just don't get why people participate in that. I know it's like it's convenient to think that you can get rich quick and that you're part of a bigger movement, but you're really part of whoever the leader is. They're grifting off you, Matt Kors, Trades, Ape Father, this Lou guy, and all these other guys, and they care that your eyeballs are watching what they're saying, but their content has no substance. It doesn't mean anything, because as soon as it doesn't happen what they're saying, they just switch to the next thing. And grifters are known for this. They're just going to move to the next thing and the next thing. If me and Chris
has already done that, like apparently he's done.
Yeah, I mean, I'm sure he'll start if it goes up 15-20% next week. I'm a genius. Look at it. But when he was telling people to buy it at 65, he forgot about delete that. And that's a lot of these guys delete stuff too. I mean, I did a stock mo reaction video, and 2 weeks later, that video is gone. And I'm like, it was like the best penny stocks that he held in his portfolio. And his whole freaking every single one of them were down 50%. I shit you not. And I'm like, the best penny stocks to buy in February 2021. And that was the peak of the best time to buy them. Literally, they all went down 50%.
Yeah, that's so lame. Like I made videos making fun of Tesla like a year ago. And of course, it's gone up massively since then. It's like, okay, well, I was wrong in the short term. We'll see. I'm not going to delete a freaking video.
Well, that's like Tom Nash. I just commented on one of his videos. He said, this is the best time to buy Tesla. And I'm like, are you freaking kidding me? The best time to buy Tesla was 2018, 2017. If you think that an $800 drop is like a 2-month drop in Tesla, and you think this is the best time now, you're sadly mistaken. And he said you should get out of the market, or you shouldn't be in the stock market if you don't see why.
Yeah, I mean, he was bragging about short-term volatility. It's like, okay, I mean, like all the stocks, every freaking stock went up a couple days ago. It's like, wow, yeah. Why are you bragging about that? That's
great. I mean, that's great, but he's missing the overall picture. I mean, you got to look at this stuff on a 10, 15, 20-year return period. If you're talking to me about the last week, who gives a crap? That's going to change. I'll leave you with a Bogle quote. The daily fluctuations or the happenings of the stock market are a tale told by an idiot, full of sound and fury, but signifying nothing. That's what John Bogle said, and that's why you shouldn't pay attention to the daily happenings in the market.
Everybody's thinking about me, Kevin, when he said that.
Yeah, he should read that quote. He should read a few books too about that.
All right, man. Well, that's the hour. I'm gonna go to bed because I gotta get up early and go to my job.
So lame. All right, man. Hey, thanks so much for having me. Thank you guys for participating. It's been a blast, and I'd like to see you come on my channel. I do a live stream at the end of the month, so you're always more than welcome to push out your message. Just got to be a little bit cleaner. I got sponsors, but other than that, you can come on and we can
I'll
have
be
fun.
a good boy. I won't put any
Behave.
phallic objects on anybody's face.
There you go. Behave. Hey, man. Thanks for having me. Thank you guys in the chat. I appreciate you, and we'll catch up soon, man.
All right, man. Talk to you later.
All right, bye.
Bye, everybody. Cheers.